Welcome. I'm so
Oh,
happy to
thank
have
you.
you.
I'm excited to be here.
Me too. So, we're so excited to be doing my podcast, which is Real Talk with Jeaneen. And my guest is Suzanne Smith, H&B Mortgage, the premier lender
Oh, you're
in
kind.
Midland.
Thank you.
Definitely, definitely. So, I'm so excited to have you here
Thanks. I'm
today.
excited to be here.
Um,
Something new and different for me.
yeah. Oh, and I figured since this is how many years of business for you?
32.
And mine's
Now I'm telling my age.
yeah, I know. And mine's like 23
Yeah.
plus. So I was going to say, let's cheers.
Hey, there
We
you
made
go.
it.
Yes, and
Yeah.
we're still kicking.
That's right. We're just going to enjoy this.
Perfect. We're still kicking.
That's right. If that's not worth celebrating,
No,
I do
absolutely.
not know what
No,
else is.
absolutely.
I always like to start out with just some market activity
Sure.
for the viewers. So today we have 400 active listings, and that's actually
Wow.
up. Suzanne, we were down last time I recorded like 379.
Oh, okay, so
So,
good.
yeah, but you know the deal. Spring market's coming,
Right,
more people
exactly,
ready.
exactly.
And then pending sales 247. There's been 164 closings
Wow.
this year in 2024. And I've
Things
been,
have kind of picked up.
Yeah.
It feels like since the first of the year. It was like January the 4th, the phone started ringing off the walls. So
it was
I
nice.
think yes, it is a nice.
I've been really paying attention to the original list price to the sold price, that
Right.
percentage. And that percentage is 95.14.
Wow. Wow.
And then when we look at the current list price versus sold price, that percentage is 97.
Wow.
So there's somewhere between 3 to 5% negotiation in our current market. Not a whole lot.
No, well, I read an article recently, that even just across the country, that people's equity is at 56.5% over last year. I mean, it's crazy how much, their equity's growing just, in such a short time period. So.
Yeah, a lot of them are just sitting on.
No, they're equity
Yeah,
rich.
they
They really are. It's a great time if you do want to sell and move up. It's a great time to use that equity to do so.
Yeah,
Rates are higher, so that's a little bit of a negative. But I really think what you end up making off of selling your house would compensate what you're paying in a higher interest rate, and also gives you the opportunity. It's not like you have to have that rate forever. You can refinance in a couple of years.
yeah.
Rates are cyclical; they'll come back down again.
I like that. And when you were saying that, it made me think about explaining to our consumers, whether it's buyers or, it's, hey, listen, it's the entire investment portfolio
It
you have
is.
to look at. You
It-
can't just pick one thing on one day
For
to
most,
decide, I'm not going to
no,
buy that stock. I wouldn't have bought Tesla.
no,
Wouldn't have
no,
bought
no,
Tesla
no,
if I had looked at
exactly.
that one thing.
Well,
But the market indicators.
that's exactly right. And I mean, your house is, to most people, it's one of their largest financial tools. It can be used, that equity can be used in so many ways. And actually, it's the largest asset that most people have in their portfolio, and especially as equity has continued to grow.
Yeah, it really
And
has.
in Midland, I mean, I can't remember, I can remember 2 years that average sales price and values of homes in Midland didn't go up. And every other year, it's at least 3 to 5%. So
Yeah,
that's a pretty good investment over time.
it really is.
So,
Yeah, and I love where we're going because we're just all over the
no, I
place.
know.
We're all over the place. But
Scramble brain.
how many times have we heard people say we're going to wait on prices to drop? And I've done videos. I know you've talked to
Yes.
people about it, but it's
Yeah.
like you're
You're in
going to be
Midland.
waiting forever. No,
You're in
I'm
Midland,
just joking.
No, you're in Midland, Texas.
Yeah.
It doesn't happen.
No,
And just like I said, we've both been in this market a long time, and it is a huge rarity. Didn't happen during, quote, the recession of the pandemic. It didn't happen as we came out of the and it didn't happen 20 years ago. The only time I've ever seen it happen was in the late 80s, and it only dropped maybe 4 to 5%.
Really?
Yes, and then it picked itself right back up again. So it's, in our area, the Permian Basin in general, I just don't think waiting for prices to go down unless you're watching it every day. You might catch, one little breath of an opportunity, but day in and day out, I don't think that's the case.
no, and for me, if you get a client that's wanting to have that strong arm of negotiation power,
Yes.
I always say, okay, well, that means we're going to be looking for something that's been on the market a little bit, and the average days on the market based on 24
Right.
stats is 57 days, just FYI.
Right.
So it's got to be on the market. Most sellers feel like they want to give it time before they're convinced the price is wrong.
Exactly.
So I would say 60 plus days on the market. It's probably going to have some updates needed, probably the more expensive updates, wouldn't you think, like the kitchens
Oh,
and bathrooms?
absolutely, absolutely.
And then, or it's going to smell like cat pee.
No, I mean,
I
well,
mean,
no,
if
well,
you're wanting a deal, that's how you're going to
no,
get
that's
one.
the house you're going to get.
Yeah.
And so those all sound attractive, but really only if you're an investor.
Yeah.
You know, your wife didn't want to wait to move into that. You know, she wants it ready to go
Yeah.
for her family, and to continue life on a day-to-day basis. So
Yeah, I was noticing too that the average sales price, and I want to get your opinion
yeah,
on this because we know sales price per foot doesn't necessarily mean anything,
no,
but the average of homes sold of the 164 is 173 a foot, which that means typically they're wanting something like you just spoke
no,
of.
that's exactly right. And you see it, I see it. I mean, we'll see sometimes up to 500 square feet, it just depending on the area. But if people are paying 173 a square foot, they're expecting a nice home.
Yeah.
Don't you, wouldn't you say? I mean,
Yes.
and so it's, but like, I don't really believe so much in price per square foot in that you'll see an oddball kick up on either end.
Yeah.
And,
Like the one in Old Midland at 548 a foot or
no,
something.
exactly.
Yeah.
Hey, thank heavens it's just down the street from me.
Oh, right.
I didn't mind it that
Yeah.
much.
I love it.
But it's a Midland, Texas is a great place to invest in real estate because day in and day out we've got a strong market, and now houses are not always selling as fast day in and day out, and I think that the last couple of years have been an unusual time for us with inflation going up so quickly, and I think people just wanted to put their hands on the table and watch to see what was going to happen with 2023 and 2022. But I really feel like that people have kind of digested it all and they have it under their belt and they're ready to make a move and to, you know, go ahead and move up and go ahead and maybe have a little higher interest rate than what they have, knowing that it doesn't have to be the rate forever. And
Yeah, and so I agree with you too. Price per square foot doesn't mean a whole lot to me either,
no,
except for one thing. When I get clients that say, I'm looking for the foreclosures, I'm looking
yeah.
for the repos, and I'm looking, where
Uh,
are they?
no, I mean, there's a million low income housing programs in the universe, but rarely can we find one that even fits properties here in Midland because they have such limiting qualities and there's you have to have limited income and all those things that they don't exist in a grand way in Midland. I
That's a
mean,
good
they're
way.
there, but it's hard to make these programs fit people because usually they only fit certain neighborhoods and certain uh, income levels, and it's not always easy to find that cohesive fit for that.
This is probably, well, 32 years. You've
Yeah.
been in it much longer than I have. And I was going to say, have you ever seen a foreclosure market in Midland,
N-
Texas?
Maybe in the late '80s, I learned what a VA repo was,
Okay, okay.
but eh, only during then. And that was when the oil and gas market just went to heck in handbasket. I mean, it really was bad, but it didn't last long,
Okay.
and it was short lived. But that was again the only time that uh, I really can't remember another time that you could truly find a bargain. People used to always say. In fact, I used to do this. I'd buy houses in Old Midland and real bargaining houses, smaller houses, cottagey type, and I'd remodel them and sell them and flip them. And I mean, I was young and single and had lots of energy,
That's
but
awesome.
people used to say, "How did you do that?" I said, "Well, you can't do it now because they're just flipping a house in Midland hardly makes sense because people don't have to put their houses at bargain price. That they really don't, in my opinion.
Mhm.
And I think that I think the values are correct. I don't think they're too high, but you're not going to find a lot of just basement bargain price houses, in my opinion. So
Yeah, I agree. I agree too. I wanted to start out by saying, talk to me because I feel like we've talked so much over the
hmm
years, but we never really touch on how you got started. What made you, so you tech and Rollins School of Business?
right, and
So what made you decide mortgage?
well, um, I had my master's in undergrad in finance, and I moved to Midland, and it was during the boom of the '80s, and but you just get a job at a bank. That's what you do with your finance degree. And my dad knew someone that knew someone else, and so I was a little junior loan officer at a local bank. And socially, I had met the president of what was then Clandestine National Bank, and he and his wife and his girls. I just became friends with them. Just literally met him at a function one night, and they liked me and I liked them, and we just became friends. And he called me one day and he said, we think that mortgage is the new up and coming thing for banks extra services, and they said we think you're the person to do it for us. And remind you, I'm 25 years old, okay? and I said, well, I'm not sure I know how to spell mortgage, much less do one,
Yeah.
know. And he said, you know what, we'll get you trained, la la la. So that's exactly how I got started. And to this day, it was David Jones, who was president of the bank then. He and his wife are still good friends of mine. They've moved away since, but he's still my mentor. And they just had confidence in me, and I just wanted it. I wanted to do it, and so I learned about the mortgage business, and I just realized that it was kind of a hidden opportunity. A lot of people didn't know about it. Most banks had someone in their bank that would do a mortgage, but they didn't actively pursue a mortgage business.
Oh.
And so, credit unions had someone that did mortgages, but they never pursued it. And I asked him, I said, if I do this, can I really try and build a clientele and have other customers besides the bank customers? And they were like, sure. And, I just decided, I read about a guy that did it and how he built his business, and I made a plan and implemented my business plan after his. And then,
Wow. How long were you at the bank?
I was at the bank for 4 years, and then a holding company down from the valley approached me and said, would you be interested in starting a mortgage company for us? And we don't have a presence in West Texas. And I knew someone down there, and that's kind of how it happened. But the bank was about to sell, and I just thought, well, this might be a good opportunity for me to do something different. And so I did, and then it really worked out well for us. And then that bank sold, and they gave me the opportunity to buy the mortgage division from the bank. So that's when I did it. And so yeah. So that's how. That's why we never changed the name. That's why we have a weird name.
That's what I was going to ask you. I was like, you can finally tell me what H&B stands.
It was Harlingen National Bank Shares, and it was a holding company down there. The Duncan family, but it was family owned, and they were great. I mean, they are a great family, very nice people. But when they sold their holding company, the buyers, because they like to play a lot, so they ran all of their fishing and hunting trips all through the mortgage department because we were making money for it. So it made it look like we weren't making money. But so the holding company that bought him didn't really want to, wasn't sure they wanted to be in the mortgage business. So anyway, so I was lucky enough and fortunate enough to have a mentor that said, hey, I'm going to show you how to buy this company for yourself. And he was just an older gentleman that took me under his wing a long time ago, and he told me how to do it, and I did it. And we still, it's all family owned. I let branch managers buy a little bit of the stock, so they'd all have, because we had different branches, so they'd all have a piece in the business. So
That's
and
good.
it worked out well, because everybody was always in the game, because everyone working there or everyone of a managerial position had a little piece of the company.
So,
And
1991, you're just driving down Washington. How's that going?
I'm still in the same space that I
know.
was. No, you know
I
what?
love it.
I'll tell you what. So,
but that's why you're a brand.
no, well,
You
exactly.
understood branding before branding.
No, I
was a
know
thing.
it. It was just a fluke because there used to be a popcorn stand in our office. It was gourmet popcorn. You know what? I lived near there. I'd always lived in Older Midland, and it just, it just made sense. And actually, when we moved in there, the shopping center was kind of in disrepair, but I never really thought of any. I never looked anywhere else. It was the weirdest thing. I just knew that I wanted it to be close to where I live, and at the time, I had an 18-month-old baby, and so I had to be able to run and do, and so all of those things really kind of played into.
That is
I
so
know, isn't that funny?
fascinating.
But we've been in the same space since 1991.
One of the things that I love so much about working with you, you are a class act, and your drive and determination and reputation exceeds itself.
You're sweet. Thank
I
you.
mean, my little bitty career compared to most people
No.
is I've never heard a bad thing.
Well,
I
I
mean, your
appreciate
customers
that.
are so well taken care
You
of.
know what? I have a great team, and I can't take credit for all that at all. But um, one thing I learned early on is that you are your team. And I also learned that every time I added a person to my team, we became more successful because we were able to do the process better. And I was free to engage the customers if I wasn't always trying to have to take care of the back end of it as well. And so, you know, we pride ourselves on handling all of the process from beginning to end in our office, which we do. And you don't have to call the corporate office in Dallas or Houston or Cincinnati, but we're all there. And it's my employees have all worked for me for 20, 25 years, and not all of it, majority of them. And so it's a family, and they have as much pride in that company as I do. And it's important to them that we have that reputation. And so what we train people from day one is this is not this is not transaction one. This is the transaction that we want to lead into a lifetime of transactions. And that's really how we all try very hard to work through our day and with our customers, is that this is just the first transaction, and I want to make sure I have 5 or 6 more with you during the next 20 years.
That's really awesome.
So
I'm going to ask you this just because I think the answer is no. I'm going to ask you, have you ever had a deal fall apart? Do you even remember a deal falling apart?
not at the
See?
closing table. No, you know one of one thing that we really do is, if we tell you a loan's going to work in the beginning, it's going to work, or I'll lay down my body trying to make it work.
That's
I
awesome.
know. I mean, no, I mean, I can't say that we never have. I mean, but we probably never let you get 5 days into it before. I mean, we really, or if someone may have presented us some incorrect information in the beginning, and you find it out a little bit later, but I can honestly say I've never had one fall out the week of closing, the day before close. I mean, it just doesn't happen.
I love
And
that. I
so,
think that's what really, and just the
no
fact that
surprises. I
no
mean,
surprise.
that's
Yeah,
that's that's what we really try
yeah.
to, and I appreciate you noticing, because that's important to us. And I always tell my loan officers, in fact, if they even make a mistake, I usually will cover it. And I mean, even though it's not something that it's not our true line of business, we'll probably go ahead and close the loan anyway if a mistake's been made on our part.
That's so great
So
because, I mean, I don't even, I'm not wise enough to know how to explain it, but you are not the average just broker
no,
office that takes an application. I mean, you're vested in the game, and I
well,
love
we
that
are,
about you.
and it's our money. We're actually a mortgage banker, not a broker, and it's my money. And so there's the investment, is that we try to run it so that we're not losing our company's money. We don't get our money from other sources. We use our own, and then we do sell the loan, and that's how we make money, is once we sell the loan. But the reason that we can be flexible is because we're lending our own money, the company's own money. So.
How this, because I would like a better education
Mhm.
on selling the loan, not to get over my head
Right,
in it,
right.
but it how has that gone? Has that changed? What's a sellable loan versus what used to not be, or is it pretty much a standard?
I think guidelines change, and requirements. In fact, it's been a long time, but they're kind of loosening up some, and that's been a while.
Okay.
But they're always changing, and always little different T's to cross and I's to dot. But in general, it's still the basics, and there are loan programs that take you outside of the normal qualification box, and we used to be kind of a little afraid of those, but not any longer. They're really they're good products, and most of all, they really cater to a self-employed borrower who, their tax returns don't quite reflect what their earning capacity is. And so it's been fun to see these work. And in the past, people were afraid of them, and they'd make the rates so high that it just, you couldn't make yourself do it, no matter how much you wanted a house. But now, the rates are higher than normal products, but they're not so high that it takes it out of the possibility realm.
Oh,
And so, yes, their guidelines are always changing. Selling to investors, I mean, that's always changing, but you know, thankfully we have an in-house underwriter, so we can stay on top of that, and we're not waiting for it to trickle down to us, 5 or 10 levels before we
Yeah.
know about it, and that can happen, which is usually not even the fault of the loan officer. It's the fault of the big company that they're a part of, and that's hard.
When we talk self-employed, would you mind just touching on your familiarity? Are we talking bank statement loans, stated income, or could you maybe shed
Okay,
some light for
sure,
the
sure,
self-employed buyer that might be watching?
sure. In the last time that these products came around, a lot of it was stated income, and those products really don't exist anymore. And there was such high foreclosure rates on those, especially not really in Texas, but like in Florida and California, and so they kind of pulled those from the industry. And I'm sure there's some kind of something like that still out there, but it's not something that we see day to day, and it's not something I would even do to a borrower.
Okay.
And we avoided them way back when too, and thankfully so. But they just didn't make sense to me, and I didn't ever want to have to pay the ramifications of it not working in the long run. So it was too risky for me, in my
Okay.
opinion. So, but now the way the products are structured, you may have a borrower that they'll they may have 1099 income from the same company,
Mhm.
but then they file a Schedule C showing zero at the bottom because they've got truck expenses and whatever. But so these programs allow people just to qualify off their 1099 income without really even taking into account what standard expenses might be. They don't even ask for their tax returns. Another one would be I had a self-employed borrower that he had been in an oil field servicing type business, and he he spent 1 year kind of getting ready to go into business for himself. And then when he went into business for himself, I mean, he was making money hand over fist. I mean, really was. But there weren't 2 years of it. So, you provide bank statements showing that those deposits were going in, and they'll take up to 95% of your deposits on some of these programs and use that as
Good.
your income. And the other day, when my loan officer said, well, all I could get was 3,500 a month to qualify this guy, but they got 20,000 a month to qualify. So
Wow.
I mean, it's huge,
That's
and
amazing.
it really is. I mean, by standard methods, she could only get 3,500. Our normal way of doing it, and yes, the rate's a little bit higher, but again, this isn't a rate you have to live with forever, and that's what people have to realize, that the interest expense for 2 years is going to be less than how much that property is going to go up if the value goes up 5 or 6% each year. Does that make sense?
Yes, yes.
And so, you know, and rates are cyclical. You can look back in history for 35 years, and it's a cycle. You go up, then you come down.
Yeah.
And we're at the top of the up, and that usually happens right before an election year. You get to the top of the curve, but there's nowhere else to go but on the other side of the curve, which is down. And I'm not a guru by any sense, but I do read the gurus and listen to the gurus, and there's a strong indication that we're going to see rates come down, probably by second quarter of this year. And I don't think I think it would be a long time coming before we have pandemic rates. Probably will never see that again, but that's okay. That is out of the norm. Everybody's lucky that has that rate, but that's not what it's. Don't wait for that to come back, because I doubt it will
Oh,
ever
and
come
I have,
back.
I have an interesting question. In 32 plus counting
Mhm.
years, have you ever seen rates do what they did during the pandemic?
Never, never.
Which,
And I don't.
which that's a good prediction of
No,
what's to come.
no,
Don't wait on this.
no, no. And the other thing is if you look at a 35-year historical rate deal, the average rate is like 7.25. So that's how unusual those rates were. And yay for lots of young people that have them, but how long can you live in that house?
Yeah.
And so it, I really think that what you may be paying in additional rate is it's going to come out way less than what you're going to pay in the increased price of the home that you end up paying if you wait 2 more years.
Right.
But
Oh,
if you're ready to move, I mean, if you're happy where you are, then it doesn't matter. But
right.
if you're thinking about moving and making a move, I, I think that you're going to get rates down to where you think they feel good in your mind. It may be another 2 years.
Oh, okay. Good,
But
good.
I think rates are definitely going to come down from where they are. within the next quarter or so of the year.
You know, when we were talking the other day,
Mhm.
and I just want to touch this for me because I'm fixing to ask a really fun question that
Okay.
you shared at lunch. And that is, and you sent this over to me, and I
Yeah.
loved it. And I've only read like 3
Well,
chapters so far, but Todd Duncan, and that's back when Maxwell was a second liner.
absolutely, absolutely. Yeah, when it was a good deal to have Maxwell give your intro for you.
Yeah, no. But I was going to. I love the title of the book, and that started a conversation we were having. That's
Yes,
high trust selling, and you know, I know I've pride my people say, how can you sell houses when you tell people what not to buy?
that,
And I
that's
mean, you walk in a house, you're like,
exactly
I
right.
don't know this. I see challenges or sharing. I don't think this is a good idea. You can do it if you want to, but here's some concerns I have, or just asking permission. Do
Yeah.
you mind if I tell you, I just think this is going to be a tough resale, and I always make
It,
it funny and tell the girls, any monkey can open the door, and any monkey, literally a monkey,
literally.
and with AI, a monkey.
No,
No,
yeah.
can write a contract, but you've got a good agent the day you go to sell the thing.
That's
The
exactly
day to
right.
buy
That's
is an
so
easy day.
true. That is
So
so true. And you're so good at that. I mean, you really are.
thank you. Well, that high trust, I know that's really important to me, and I know it's very important to you. So
Yes.
you had said something the other day that I thought was great, and so everybody's talking about rate buy downs, and we're not saying that they're not bad or good,
Right.
but I wanted you to share because I think buyers. So here's what happens for me. We're in a market where they're selling for 95 to 97% of list unless they're grossly overpriced. So let's just say $500,000.
Right.
And we know that's going to sell within 5% of that statistically. They have negotiating power. That's what those statistics tell me. Limited, but some.
Yes.
And then agents are telling the buyers, buy the rate down. Use that, get an $11,000 concession in paragraph 12 and buy the rate down. And I just wanted you to walk me through, based on that high trust that you and I bank on,
Right.
talk to us about why it may not be a good idea to not negotiate price, but to use a concession to get the rate down.
Okay. And I'm going to turn it both ways.
Okay.
And the part of being the trusted advisor is number one, and it's number one thing that I try to do. Sometimes I forget, but you try is to find out what your customer needs are. And, that's what you want to know. How long are they going to live in the house? How is this your forever house? Is this a house that you plan to maybe keep, but you're going to buy a second home somewhere else? You've got to know what their goals are. How much cash do you want to use while you're doing this? How much, what's a comfortable monthly payment that feels good? And the reason I ask that is because if let's say that you go in and you ask there's two types of buy downs. One is a temporary buy down and one is a permanent buy down. A temporary buy down will cost you typically one discount point, which is 1% of your loan amount, to buy down the interest rate about 0.25%, and it will be permanently bought down that 0.25%. So let's say rates are 6.5. You want to do a permanent buy down, you pay 1 point, and you get 6.25%, or the seller can pay that on your behalf. A temporary buy down is where the seller pays cash at closing to the lender to buy down your interest rate in increments. And let's say the interest rate is 6.5%, and you do a 3-2-1 buy down. Then the first year that interest rate is going to be 3.5%. The second year it'll be down 2%. So that's it, you're going to be at 4.5%. The third year is the one to the equation. You're going to be down to 5.5%. And then for the life of the loan, your rate will be back up to 6.5%. Well, depending on the loan amount, that can cost anywhere from $12,000 to $18,000 for the seller to do that for you. You can do just a 2-1 buy down, and that will probably cost $6,000 or $7,000. So you can do these temporary buy downs. But here's the real thing: let's say that the seller agrees to pay $12,000 on your behalf to do this 3-2-1 buy down. So that means he's not going to come off the price $12,000. That's still $12,000 that you've left on the table, so to speak. And you think you're only going to be in that house 2.5 years. Well, did you get the whole advantage of the $12,000? No. Would it have been better to ask him to buy a 2-1 buy down and only pay $6,000, and then you've still got the other $6,000 to reduce the price by or to negotiate?
Yeah.
And so you've really got to look at what are your long-term goals with this house, and how much equity do you want to have tied up in it?
Yeah.
And because it's not always great to have a lot of equity tied up in your house. in Texas, it just sits there, and you're using your house as a savings account. No interest is earned, no dividends. And so having a big down payment and big equity in your house, it sounds good. It's what your parents told you to do, but really you're tying up a lot of cash that you could be using somewhere else to possibly be making money for yourself.
That's a good point.
And so don't ever, and as a trusted advisor, I don't think I'm doing my job unless I present both of those opportunities to you,
Yeah.
and or those ideas, because and I have, if you're dealing with an engineer, he looks at you like you're crazy lady. but in a lot of times, but if I'm dealing with, a wildcatter and he likes to use his cash to go drill wells, I tell him, why do you want it tied up in your house? You know, the house still costs the same, it has the same value no matter how much equity you have in it. And that's just something to remember. And it all depends on your goals. That's what really determines what you're going to do with it. It depends on what your personal goals are as far as investing goes and, future. So,
Well, and then like for us as realtors, you find this house, go back to the $500,000.
right.
And yes, you can be creative and ask for the Buydowns, or maybe we just get the house for $475. Like maybe we just get the house
No,
for $475.
no. And then in the long run, you're probably better, in the long run, it really is kind of, and that's what I was trying to say is that these buy downs, you just need to look and see if it's really the value. And I know that in what we saw when rates first started going up, you see people pay just an abnormal amount of points. And, it takes 5 years to recoup nearly every point. And so if you're doing a permanent buy down just for 0.25% and you're paying a point to do it, and some people were paying 2 and 3 points, but you can't talk some people out of it, I assure you. I could draw every picture in the book on my pad of paper, and it just. But
it's just so fun to have the conversation that no one else is having.
No, exactly.
Yeah, I agree. Let them make up their mind.
Well, it is, and it's all I can do is give them the facts, and I and try to meet what they told me their goals were.
Yeah, I like that you were saying 5 years to absorb the benefit, or what did you?
Well, okay, so let's say let's just say it's a $500,000 loan, so the point's going to cost $5,000, and I'm going to lower my interest rate by 0.25%. So, in order to get the full benefit of that $5,000, it usually in monthly payment savings, because I lowered my rate.
Okay.
You see,
yes,
it takes about 5 years to recoup that, and that all the specific number depends on the loan amount, of course. But you see what I'm saying? It's if this is a 2 to 3 year house, and I always tell the single engineers that come in, well, let me tell you one thing: if you're not married and you find a wife, that's why you're in Midland, come find one. And if you find one, she's going to come over here. She's going to go over to your house and say, "We're moving." So don't think you're going to live in it more than 2 to 3.
No.
And they're always like, when they come back the second time, they're like, you knew exactly what you were talking about.
Yeah.
I said, I know how the girls are. They're not going to stay, especially one that an engineer picks out.
Yeah.
I'm
Well,
just
I was
kidding.
thinking about a few headlines that said, and projections, which may or may
Right.
not occur, but the year of the fives.
Yes.
So interest rate, we may see in the fives, we
Think
may
we
see
will.
5% appreciation. So the reason I think this is the funnest thing you and I are talking about today is
good.
let's go back in time to 2023
Yeah.
when rates were 7.5.
No,
And then the agent would tell them, buy it down. And I'm going to say damn.
No.
In a damn
Yeah,
year later.
Yeah, no, I mean, exactly. No. And you know what?
Did you need to buy it down?
It-
Do we need to if we can refi within how many years? A couple
no,
years?
I think easily. And the thing is that people that did own a home and had a 2.5 or 3% rate, these rates were making similar loan amounts go up over $1,000 a month, and that's a lot. I mean,
Yes.
that's not pennies. And so I think but most of it was a mental game. It really was. And funny, 6.5 sounds a lot better to people now, and it's only a percentage lower. And I don't mean to sound like the old bull, but I guess I am one. Is that you just learn over time that 7.5 or 6.5, you learn to make it fit because you want a house, and it again, the cutesy little thing. Date the rate, marry the house, or is it vice versa?
Something
Whatever.
like that, yeah.
But the real thing is you do not have to live with this rate forever. And refinance, especially in a Midland market where your value keeps going up, typically you'll be able to refinance with not a penny out of your pocket. And
like that.
we do that, or when rates drop, we do them by the handfuls, and literally no one's even writing a check at closing.
That's
and
awesome.
and so you can say they're cost free, but you're going to pay a higher interest rate. If you want the lower interest rate, then you can roll the fees back into
Well,
your
and, in some
loan.
cases, if they file an itemized tax return, you could write off the
No,
cost of the interest.
absolutely,
Not
absolutely.
everybody
Well,
can.
and you
I
can
can't,
no,
but
you can write off the discount points. It just
on the
depends. So
property sale.
but no matter what it is, you know, if you look at the difference in the total interest rate over the term of a loan between 1%, it's not huge,
It's
and
not huge.
it feels huge. The numbers feel huge, and everyone wants to stand by the water cooler and talk about their low interest rates at the office, but it's really a 1% difference is not a huge difference, in a monthly payment. Now, 2%, 3%, yes, but and because so many people had that, like 2.5% interest rate. I think I read an article that said 60% of eligible home buyers have a rate 2.5 to 3%. So that's hard to
Yes.
part with, but you're going to have to someday, unless you want to die
Yeah.
in the house.
And I always say, like, Perry and I would love this idea of this house, with
Right,
land and room for the boys.
right,
But that house is significant.
sure.
Prices are not going down.
No,
And we're at the
no,
2.2. So
no,
it's like,
no,
this is a
no.
great
Do you
example
give it
because,
up? Do you?
yeah, do we?
No,
Because it'll be giving that up.
no.
And
You
then we're
are.
not going to make it up on the
No,
purchase.
no, no. Exactly,
So
exactly. But again, the price of the house isn't going down.
no, it's not.
It's just
It's going to
not.
get more
It
expensive.
is. It is. And I, well, it's like anything. It's consumer demand. You just have to swallow it a little bit and think, I I want it. I want it, and I can live with this interest rate. And for now,
Yeah, sometimes when I'm with people, they'll be like, "I want a guarantee," or everybody
well,
wants something
sure,
really
yeah,
good, and we want them to feel
no,
good.
no,
But I always say,
absolutely,
if you're wanting 100% guarantee, I 100% guarantee you're going to lose all of your money if you rent.
yeah, no,
That's
absolutely,
the only guarantee.
no,
So it's like you're right. We're playing with the numbers, with the interest rates and such, but we know, like you just stated, homes have, for the most part,
that's
always
exactly right.
appreciated. So your invested dollar grows.
And at the same time, your rent's going up as well. I
Yeah,
mean, they have little models you can fill out, and you can fill out those all day long, and you'll rarely see it ever come to the advantage of the renter.
I know. I
And
haven't seen that.
especially in a strong market like this, because it is, you're making their mortgage payments for them. So,
That's true. That's
I
true.
mean, you really
I like
are.
that. I like that idea. Is if you don't want to build wealth for yourself and you want to rent,
That's right.
build it for
No,
someone else.
yeah, exactly.
I mean,
But you know
that's
what?
kind of a
There's
funny
so
way to say
many
it, but
programs now for first-time home buyers that they can get in for a 3% down payment. And at market rate. That's just and so there's just a lot of programs to get people into homes. And if you're renting right now, it really doesn't make sense. And you can get a gift from parents for your down payment money. You can you can borrow against an asset. If you have a vehicle that's paid off, you can borrow against that for down payment money.
I
So
didn't know you could do that.
mhm, always have been like for
I did
100,
not know
yeah.
that.
In any, you can't borrow it unsecured, but if you secure it with an asset, then you can borrow it. Anyway, then you count the payment and the debt to income ratio.
Oh, okay.
Yeah.
Yeah,
So,
that's really neat.
no, it is. And there's a lot of ways to get to a down payment, and that's why you need to talk to a lender. Lenders know the programs that are out there and that are available, and will walk you through ones that will fit your scenario.
I think another thing that a lot of us appreciate, because there's so many great real estate agents in
Sure,
town, but it's to be a trusted source, you got to stay in your lane.
that's it.
Like I'm
Right.
not going to have detailed lending conversations with a buyer because that's not my
No,
lane. And
exactly.
that's why I'm saying you got to really partner up with this whole idea of team.
No, you do, you
Have a great
do,
team of advisors around you.
well, and once you find a good realtor, and Jeaneen being definitely one of those, um, what they're going to encourage you to do is to get pre-qualified, and we even do our advertising directly to the consumer to pre-qualify before you buy it, just simply because you're in a seat of power. Once you walk in, you say, I've been pre-qualified, and
Yeah.
a realtor wants to talk to you, realtor wants to work with you. And not that they wouldn't, but they love a pre-qualified buyer because you're not wasting your time, and they're not wasting their time. And so, you know how high you can go, and you know what the numbers look like along the way. Most people never want to go as high as they really qualify, and so you know, let a lender work it up all along the way to see where your comfort zone is payment wise as well as cash needed to close.
I wanted to ask you if you've seen, because I've only done one,
Mm-hmm.
and that's an assumable. I mean, and I just heard of a house coming up in my neighborhood,
Uh-huh.
and it's at a 2.2
And it's
assumable.
assumable.
And we actually had one, but it was over in
Was
Legacy.
it FHA?
I
Is it?
haven't ours, yes,
Yeah.
ours.
Okay.
So I just want to that
Okay.
if you hear sometimes that there's this great low rate that's assumable, can you maybe just talk to us about that?
Sure, sure. Typically that would be an FHA rate. I can't think of any other program that
Okay.
has it assumable. But really, you do have to qualify credit wise. In the olden days, you didn't used to have, but now you do, and it releases the current owner off of the note, and really just puts the new owner on the note. And you would contact whomever is servicing or holding the investor on the note, and they have a process that they send you through for pre-qualification. I think it takes a little bit longer. I wouldn't say there was going to be a 30-day close on that.
Okay.
I don't really know of anyone that I've heard doing it this time, during the last several years, really. But it's a real deal. And if you've got the cash to pay the difference in the sales price and what's owed on the mortgage, then, and usually that's what kicks people out,
Yep.
is not having the
Yeah,
equity
because
down
this one
payment.
was like they had $150,000 loan balance,
Uh-huh.
that 285
Right.
value, but that buyer did have the difference, and then they just assumed their escrow
Yeah.
accounts.
Well, I mean, yes, and that's a neat deal, and that's a real deal, and there's nothing even tricky about it. The thing that usually cuts an assumption out is someone not having the equity cash to put down to assume that rate.
Yeah, that was a lot.
Yeah, and
They
if you
did.
were, if you were going to, that is a lot on an FHA loan
And we have talked
too.
about when you're shopping that way. I know one other real estate agent. There's probably a few of you more,
Uh-huh.
but that I've heard of. That's two of us.
Uh-huh.
And then I've heard of a third being advertised, possibly coming up. Okay, you're going to buy 3 houses. One of I mean,
Yeah.
not a lot of pickings.
No. They're not out there. They're not. You've got to be looking for one to be able to find that. But they may become more frequent now because there were a lot of people that refinanced on FHA on those rates, but no one wants to give it up. So.
Nope.
This but I get it, and I'm a relatively conservative person, but I do know, and I would lay my life on the line because I've owned a lot of real estate in Midland over the years, and it's just kind of my hobby, to buy and sell real estate. But I will tell you that it's never a bad investment to buy a property in Midland and really the Permian Basin. I would be so bold to state, and there's always a return on it unless you don't take care of the property and just let it go to heck. You're going to make money when you sell a home that you've purchased in Midland, and I truly believe that, and I personally I would stand behind that because I do it, and
Yeah.
and I've never even come close to losing money. I always make money doing it, and you just get tired of messing with them.
Oh, I know.
That's where the hard work comes in. I like my day job
I
better.
know. Yeah, I was talking to a friend of mine the other day about the rentals. Like we have them, but they're a thing. Like I would not call that passive income.
No. Passive that is not the
There's nothing
appropriate
passive
word. No,
about
there's nothing passive about it. But and finally, you just think, I'm tired of it.
Yeah. What else can we do?
No, exactly.
Yeah,
Go dig ditches.
Yeah, do something different. One of the other things I was going to talk about being the trusted
Sure.
is, and I was thinking about this as I was driving, knowing that we were going to talk today, and I think the consumers have a sorting process. When I say that, what I mean is if you've been in business 32 plus years, the consumers, they sort out people that are not committed to the community.
True.
And it's funny. It's like just life. Whether it's our florist, if it's a restaurant, if
That's a
it's,
good
doesn't really
point.
matter, a car wash company,
No, that's a good
mobile car
point.
wash guy. If you're not about good service and community concerned and being a people
Yeah.
person and doing right by somebody, the world just calls you out.
Well,
Over time, you won't make it.
no, and you know what? I think what you really just hit on is do right by people.
Yeah.
And of course, I was raised that way, which most people are. But I had a boss one time that he said, even if we made a mistake, Suzanne, we'll cover it. You've got to do right by people. And I knew that, but it just, I remember it was something really small. And he said, no, he said, we will do right by this. And that's kind of how I developed my philosophy when it was my own business is even if we make a mistake, because we're all human, we're going to make mistakes, we cover it. Because you've got to do right by people, because you know what, my business is 80% referral, and I want to be doing my friends' grandkids, their loans, and I want them still to trust me all these years, and I think that they will. People remember, especially in a community like this, and they remember that you were the one helping on the food board, or whatever chamber or whatever, because it takes all of us to build a community that's as strong and just worthy as Midland is. I mean, it's so unique, and it's a great place to do business, and it's a great place to have those relationships with customers. It really is. I mean,
love it. Yeah.
customers are, they'll be loyal if you'll do right by them, and I think that um, I just think it's a principle to really carry it as far as it has to be carried.
I like that. I like that you put that down because, even Dale Carnegie, way back in the day,
Right, right.
Kay Sutton walked me across the parking
Yeah.
lot back in 2002 and had a little talking with me. And I
Yeah.
signed up for the Dale Carnegie course. And it's when you make a mistake, and I'm not talking about your mistake, I'm talking about my mistakes.
No,
I
no,
admit them quickly and emphatically, and I make
but
them
I
right
did,
because you
but
do
I didn't always
mistakes.
know to do that,
Yeah.
But and that's what I even tell my employees: if you make a mistake, if you're the one that tells me about it, I will not be mad. If I hear about it 3 weeks from now, and they know it, and they'll come in with their tail between their legs, but I will not raise my. I mean, I don't even flinch if they come in to tell me,
Yeah.
and because we're human, and I make mistakes all the time. I'm glad they're not keeping track of my mistakes. Maybe they are, but
Yeah, no, I know. I like
but it's important, and it's important to do that with your customer. I'm sorry, I was wrong, but let me show you this,
and how we're going to fix it.
yeah, no, absolutely, and have your solution and do it. But it makes a difference, and people notice it. I think I noticed it as a consumer.
Me too.
You
Me
know,
too.
I noticed it from somebody that might work at the dollar store. If some little kid's so nice and polite, and I mean, I'll walk up to him and say, you need to be in sales full time, and they'll be looking at me like, lady, what is wrong with? I do it all the time. It embarrasses my daughter to death.
Yeah.
If I have a good
We're
salesperson
trying
or
to steer people
no,
into their
I
path.
know I do well, and if they're just really they have pride in their job, I just notice it, and I think I'm always so impressed by, especially in young people, and how companies instill that in their employees. It's a trick. People don't just become that way because they're working for you.
Oh, yeah, yeah.
And so I always notice it, and again, I embarrass my daughter to death by
Because of
mentioning
it.
it to people.
What are some charities that you guys over the years, like things that you're passionate about as a company, things that you want to make sure that you leave your mark of success on or pass the success through to?
Sure. I think a lot of it changes. Just it's been a long haul. And the reason it changes is because I think people in your office are going through certain things. Certain health issues. And so it becomes important to you as a group because they're suffering from someone in their family going through it, or them. And I've always been a big proponent and supporter of the American Cancer Society, and because it's personal to me. I think that our group is really good about working in and volunteering from March to Dimes. We try to diversify in that we're not just staying in our little cubicle of life, and so it's really whoever has a cause, and we'll all try to rally around it.
Yeah,
Does
yeah,
that make sense?
yes,
And
it does.
and I really sitting here listening to them, it doesn't even it's hard for me to even think, because it's really whoever in our group or team seems to have something that they're passionate about. We all try to gather behind it that
Right.
year or that. Does that
Yeah.
make
I
sense?
think it's kind of a heartstring approach to
No, it
this
is.
too.
For me, it definitely
Yeah.
is. And we've we have we'll help individual families that we see in need. That's not through an organization or whatever, and we'll do like their whole entire Christmas, or we'll And I will have to say, sometimes you spend a year and you think, we really didn't do anything charitable this year. Let's regroup and let's find someone
Yeah.
that really is in need.
Especially in the busy years.
No, absolutely,
Yeah.
absolutely, and it kind of tugs at my heart because I think I do think that's important, and I think it kind of completes the circle as well.
I was going to talk about one of the reasons why I want to do the podcast too is we get to know each other
Sure.
and the public gets to know us a little better,
Yes.
a different side of us, because it seemed like there's no time to sit and have a conversation.
No, and
So-
I've known you probably for 23 plus years, and just really in the last year have we sat down and visited probably twice, and that's like a bonus for the whole year.
I know,
Isn't that
right?
fun?
So
Had fun.
It's let's talk about being an entrepreneur, being a self-employed person. If we can even take the slide of being a female entrepreneur, but that's really not where I'm
No,
going.
right.
Man, I was driving down and I was thinking about how your reputation is stellar and that the community has thanked you by choosing you as the one of the lenders of choice. You know, you
Right.
really
No,
are the
no,
one
no,
of the top
it,
lenders in Midland,
but you're
Texas for a reason. So the community's spoken. The vote is out. They love you. And then I was thinking, besides that, the fortitude it has taken to keep the doors open. You know, now we're going to talk about because it ain't easy being
no,
cheesy.
no,
I tell you
no,
that all the time.
no, exactly.
Getting your handed to you.
No,
You know,
exactly.
talk about that because it's not. There's just tough days.
Well, yes, but I should have thought harder about this ahead of time. I have to say that yes, it's never easy, and well, I mean it is, but you have to really like what you do, and I still stay involved with customers. Yes, I'm the majority shareholder of this company. I'm the president, whatever. Yes, that was my idea. Yes, I rounded up the money, but what keeps it fun for me, because though all of that part's not fun usually, but what keeps it fun for me is, it sounds really corny, but is truly satisfied customers. And I realized a long time ago that I wasn't doing it for the money anymore. I was doing it because I wanted to be the best in the market. That was my goal. And that was and really it was my husband that he said, you don't even care about them. He said, you never even look at your paycheck. And because we all work on commission, and so you never know what your paycheck's going to be.
No.
And he said, you do it because you want to be the one that people come to when they have a question about mortgages. And I think that once I realized that that was part of my reputation, I took it on as my mission. And if I had my co-employees always laugh. They said, like when refinances were real big and whatever, they said, you talk more people out of it than you do into it. Because I use that same method. Well, how long do you plan to stay in the house? Well, if you're going to be gone in 2 years, don't refinance. It doesn't make sense. And of course, that cuts me out of business, but they're going to remember me when they want to do something in the future. And they're going to tell their friends, you can trust her. And that's what I realized became most important to me, was just being trusted and being the one that, if you and I mean, I spend a lot of time during the day on the phone to people that there's no business out there with my, but they just want to know something. They trust me. They want my opinion, and that became important to me, to be someone that was known, because mortgages are not terribly glamorous. So, and but I wanted it to be recognized in our community as a true profession, not just as a byproduct of, you need one, if you buy a house. And so it was important to me to give it a little class, or try.
Yeah.
And my team, I really tried to get them to feel and act the same way. And they take pride in taking care of customers. They really do. They love, when they get positive feedback. It means a lot. It's not just oh yeah, thanks. I mean, it means a lot to all of us, because it's our goal is to.
Reviews matter.
No,
They
it
really
is.
matter.
No, it really does matter. And if it doesn't matter to you, then you don't need to be in a service oriented business, in my opinion. And because you want people saying the right thing about you. And if I ever do get negative comments, which I can't think of any that I've seen, it's a heartbreaker for me. It's but thankfully it doesn't really happen. But that I just think that people want a professional to handle this, but it hasn't always been that kind of industry because, it gets a lot of bad press because there's a lot of crooks out there, not in Midland, but, just in the United
Yeah.
States in general. And there was during 2010, things like that. And so I just always wanted to be an upstanding and outstanding lender that stood out for their knowledge and the way they treated their customers. And that's what it meant to me to be an entrepreneur.
Yeah,
Is to sell me, not just my product.
Well, I know we can't oversimplify it, but 32 years. What is the one?
I'm feeling really old every time you say that.
No, but I'm just saying. Well, mine, I know.
No,
me
I'm
too.
just
But I mean,
kidding.
I just think there's just some challenges
Yeah.
in just being an entrepreneur that's been like a hard hurdle to climb.
Okay.
I know you've got the customer service
No.
down, but just running a business, is it the time? Is it the balance?
In
Or
the
what is it?
beginning, it was like I said, I had an 18-month-old baby, and
Yeah.
then 5 years later, my husband was diagnosed with cancer, and here I was all of a sudden I wanted to just be under my mom's arm, leaning my head on her shoulder because it was a lot. I mean, it was as my mom used to say, I'm not sure your shoulders are big enough. I mean, you're always having to find investors to sell your loans to. You're always, thankfully, we were usually, we were a profitable business, so it wasn't like I had to worry about making the payroll, But, you might be rocking along thinking the world's great, and you may have 5 employees get hired away by another company. Those are the things that knock you flat because you depend on your team. Your team are the people that made you, and they're all integral part of who you are as a professional.
Yeah.
And it was, I took the professional part of it probably more seriously than I do now, and not because I don't take my job seriously, but I just I've grown up, I've matured. Bad things still happen. They just don't hit me as hard.
Yeah.
I've got my glove up, and
Yes.
and as I tell my employees when something bad happens and they're coming in with their tail between their legs and you're not going to believe what just happened, I always tell them, you know what, they can't eat you. And it took me a long time to really figure that out. But once I figured out, no one can eat me. I'm going to get up tomorrow and I'm going to do the same thing over again, and I'm going to survive. And I just, I think that that's what it took, is just realizing that they can't beat me. They can beat me down, but they can't beat me. And
I like that.
so, and to be honest with you, very few times have I even been beaten down. But there are times when you think, "Hey, this is bigger than me."
I like
and but it's not. And faith, God, I pray a lot, and when things are really big and significantly scary, I pray. And it's funny, God always opens the door for me. It's nearly amazing, and I mean, thank heaven is all I can say. But he somehow he pulls back the shade so I can see the correct actions to take.
Yeah, that's a great point.
It-
That's what I do too. And it's that there's lately, of course,
Yeah.
last year we talked about that. It's the footprints on the sand. Like it's got to be pretty monumental because
No.
I'm pretty tough too.
Yeah.
But man, when you get to that point,
It-
your faith is your rock.
No, that's
was-
exactly right.
yeah.
And it does. It knocks your feet out from underneath you. But you know what? And now I know this because I'm older and wiser. I'm always able to get back up, and I know I can.
And you know
And
you
I
can.
know I can. And it's important to me that I have young people working in my office that I hope I can bring up and continue as they mature. I mean, they've been with me now 10. It's not like they just got there, and so it's really nice to have them to depend upon and to trust them and to know that they can, carry things on into the future because we get offers for bigger companies to buy us and, national companies and whatever, because we're fortunate enough to have good numbers and good reputation. And every time I think about it, I think, well, you know what? I can't do this to my team because we're a family. And I hope that what I'm trying to build from within will help that to continue as long as they want.
Yeah.
As long as they want to be in the business too.
I like that too. And have you noticed? I mean, we won't talk about. There's always a new real estate company emerging. That's just the cycle.
No,
of my
no
industry.
kidding. Especially in the last few years.
Yeah, goodness. But anyway, I was thinking about, for me, I like, and I'm learning too, even more than I would have liked to have learned. It's like,
Yeah.
it's like, what do you call it? A waterboard at school of learning.
Exactly.
Yeah. But anyway,
Slower.
slower thing. But I was thinking about, I like it when there's, personally, I'm more comfortable with the balance of enthusiasm and youth mixed with experience.
Absolutely.
And
That's a good.
I've
really
seen
good.
companies that they're all the old geezers.
Yeah.
Can you say that out loud? Or they're all the young,
No,
got the young group.
exactly.
And either one seems a bit off kilter to me. I like that mix.
And I think there's strength in the mix,
Yeah.
and because now the world has determined there's different generations, and now that we know that, and it's scientific study that these are different, they have different buying habits, they have different likes for advertise, they do
Communication styles.
yeah, exactly. And because I think I've got one of each in my office, and I hear their feedback, and we can all see the very same thing, and the feedback from each one of us is it's hilarious, really. And I mean, we've got everybody from 26-year-old to old me, and don't say that numbers, but in everything in between. But everyone will see the same ad or the same quote or whatever, and we all interpret it differently. So it is important to have all that because you want to appeal to all ages, and so I think it is great to have the good mix, and they have a lot of great ideas. But sometimes I have to say, but think about the reality of implementing this, or think about how it's going to be perceived by a whole range of people instead of just your Gen Z or your millennial, and so it's funny sometimes, and sometimes we'll just get knocked down drag outs about it.
Yeah,
So,
because it does.
no, I mean, because that's how different the opinions can be, and I concede every now and then that they're right, but a lot of times they are right, but a lot of times I have to bring the reality to the situation. Does that make sense?
Yes, yes.
And yes, that's a great idea, but here's how the world works. This is how it really works. And so I think it's great having that combination. I
Me
really
too,
do.
because I've seen it where, you have all the new, fresh ideas, but they get poo-pooed by the senior staff. and
Yeah,
it just
because they don't
squelches
understand
growth.
it. No, it does. And I want to be different. I want to be relevant. I want our company to be relevant.
Yeah, yeah.
And people do business differently than they did 4 years ago. We've all learned it. It's not, and so things are different. Realtors don't stay in their office. I mean, you can't. Buyers are looking at a zillion houses before they ever even call a realtor.
That's so true.
And that is a huge mistake, in that they might just call the realtor that has the listing, which there's nothing wrong with that. But I hate seeing customers that I can tell they're talking to 10 or 6 or 7 realtors. I think that everyone's better off if they have a professional taking hold of their house hunting mission and leading it. And I feel the same way about we'll have people that have loan applications in with 3 or 4 people at the same time. I don't know who has the energy to fill out the paperwork 4 times.
I know,
but
it's
no,
extensive.
it is. But I think that when it's usually younger people, but I think once they realize that if they narrow that down to one person, at the helm of the ship, your realtor and one lender, doing that they're going to be more interested in taking care of your business for you and giving it 100% because they know they've got 100% of your attention.
Yeah.
I mean, it makes a difference.
I like what we talked about the other day, and I just want to talk about it because if we know there's buyers out there either under contract or going to be under contract.
Yeah.
So you were saying the minute someone creates an application, somehow their information becomes public.
Right.
And then they start being contacted by total strangers, which sounded to me, because, I'm at perryonmatch.com. Yes, I said that out loud. But no, so it's like, you fill out your online application.
You put stuff out there for dates.
Then you get all these weird strangers trying to approach
Well,
you.
and here's how.
But how can they stop that? How should they handle that?
I'm glad you asked because that's a great question. When you do apply for a car loan, house loan or whatever, people are going to pull your credit. You know that. You give us an authorization to do so. Well, the credit bureaus are allowed to immediately sell your lead to companies that are willing to buy leads of people buying houses. And they know if a mortgage company pulls your credit that you're at least interested in buying a house. And so they can buy your leads and immediately they'll start calling you. I mean, I've had customers say, I had 120 calls on my cell phone. And there's nothing, we take out all your personal information. We take out your email. We take out your cell phone number. But if you've ever applied for credit somewhere else and they see you tagged, then they go back and find it from a previous time.
Oh, I wonder how that
From it could be from a
Okay.
car dealer pulling it. It could be from Dunlap. There's not even Dunlap. See, my dealer's pulling it. Tells you how old I am. But and so then it triggers them that you're a prospective person for a mortgage, but there is a way, and everyone should stop what they're doing, and that you can opt out, and just Google or call our office, and we can send you the link. But you can just Google opt out of credit inquiries, and it's not that you're freezing your credit; you're opting out of people being able to sell your lead, to sell your information as a lead. And we have it on our emails, and we try to convey that information to people. And a lot of people do it. Like on our loan app, the minute before you sign it, we say, please opt out. But here's the catch: is that it can take up to 5-6 days for that to activate. So it's better that you do it before you make your application rather than while you're making your application.
Because I had a guy tell me that he was maybe not 120,
right?
but he was annoyed.
Yes,
and everyone was saying, no, I've got the better rate.
Yeah.
No, I've got the better rate. It made him have some concern. Like, am I with the best company? Am I getting the best?
No, and it happens all the time. And don't forget, the people that are telling you that, they never have to look you in the eye. And if you're using a local lender, you're going to have to look them in the eye. And if I tell you something, it's going to have to be the truth, because I don't want to ruin my reputation. But if I just pulled your name off of a list, I can pretty much tell you whatever I want to get you into my folds. And I'm not saying that's what these lenders do, but I have seen circumstances where when I say, do you have anything in writing? And they're going, well, no. And then when I tell them to get something in writing, then they're right back in my office again.
Oh,
and so they wasted a lot of time with stranger guy, because they probably traded phone calls for 3 days with them. He gave them a rate, but the rate was based on paying additional discount points, which is more money out of your pocket. Just a continuation of it. You wouldn't. I know we buy a lot of things from strangers now, but mortgage is probably one of the largest financial decisions you're going to make in your life. Why would you do it with a stranger that you've never laid eyes on? I mean, in my opinion,
and I've had it many times, Suzanne. They argue, they get very defensive because no one wants to have made I don't want to make a wrong decision.
No.
And then they end up getting to the closing table. The numbers aren't what they thought. But now you're going to lose your earnest money. You're going to use
and you're at
options.
the closing table. Yeah. You're moving trucks out front. No, exactly.
Yeah.
I mean, you're moving trucks out front, and that's what they count on. They count on that you're going to go through with it, because it is too much trouble not to go through with it.
I want to talk about, because I don't think many people are publicly talking about the NAR and the lawsuits. Keller Williams just settled for $70+ million. He was one of the last. Gary Keller and Keller Williams was one of the last to settle. So this is just Jeaneen's opinion,
Sure,
which is probably inaccurate, but it's my opinion. So my side of the fence is, because we do slightly more listings than buyer representatives.
Sure.
We still do quite a bit of buyers, but I see a lot of these new agents come in. They're not skilled. They just really lack a lot as far as doing the best job for their clients, in my opinion. But because the house is listed in the MLS, Suzanne, the seller says, I'm going to give you 3%. So the monkey opens the door, writes the contract, and we work with the monkey.
Well,
and I'm really being funny.
No, exactly. You are.
But then you get under contract, and we do our job, which happy to do. We do their job, which is okay. We will do that too.
Sure.
But the buyer, is not being served
well.
well.
No, that's exactly right.
But they're getting that 3%. And so now if that all goes away, I wouldn't mind it. I'm very happy. I know it's very controversial, but I'm happy that I'm in an environment where I can sit down with the seller and ask them what they're comfortable paying.
Right.
Because I've always thought, I'm like you.
No.
I never figure out what I'm going to make, but I've worked with many agents.
They
will literally come and tell you, I'm going to get $27,000.
Yeah.
I'm going to go to China.
And in most, you know what? In most cases, you haven't even figured out what 2% of the. I mean, I don't even. I really we pay our commissions on the 15th. I never know what my check's going to be, and I usually look at payroll and sign off on it, but I never even look at what I'm going to make.
Yeah.
That because we don't work that way. We're
No,
working about
but if it changes, here's my question for you, because I want it to change a bit.
sure,
I think, and when I say change, I really mean improve.
right,
I
right.
would like sellers to feel validated, to have a conversation with their agent, and if they want to offer compensation or if
Yeah.
they can afford to, because there's some cases things are
Oh, exactly, exactly.
then you have those conversations. And then if a buyer decided, let's say it changes, buyer
Mhm.
agency changes, sellers are not required
Right.
to automatically to
Pay,
get
yeah,
their home
right.
listed in the MLS pay. Now a buyer wants their agent. Do you see that changing the way buyers are going to buy houses if the only way they could get a buyer representation, if I said that right,
Uh-huh.
is if they pay the 3% or the 2% or whatever percentage out of pocket? What's that going to do? Have you thought about the impact?
I really haven't, to be honest with you, but I will say that I think that I think somehow, and I'm not sure how they would do it. I think it's going to lead buyers to doing something directly off the internet. I mean, I would see someone coming up with a way to solve it to where buyers really didn't have agents, and I'd hate to see that, and I think it's the demise of the industry, and we've had major things in our industry come up that we thought, well, okay, we're all out of business now. If this happens, we're done. And you know what? We always come back to the way we used to do it. And by that, I mean, I do think that, it's not really for me to say, but because it's not my industry, but I do think that people should be able to negotiate commissions based on, whatever they want to base it on, but at least have the talk with their realtor.
Yeah.
But I think buyers would be making a big mistake because a lot of buyers don't want to spend that extra cash to pay the commission. That's extra money out of the pocket, and some people, a lot of especially young people, they're spending every dollar that they've saved to get a down payment, pay the closing cost, and I think what you would see is you'd still come. I think it's going to go full circle. I think you're still going to see people raising their prices to cover that commission to pay it on behalf of the buyer. Is what I think.
Yeah.
Does that make sense?
It does. It does.
I think it's just like if you're asking them to pay your closing costs, they're going to tack it onto the sales price, and so, I mean, you're going to be paying for it, but you're going to be able to quote finance it instead of pay it out of pocket. Does that make sense? I mean, if it'll appraise,
If it will.
yeah,
Well, and that's kind of, when I was thinking about this was, and I tell, even at my office, the standard's high.
right.
Day-to-day humanity, maybe that day we didn't meet that standard because someone's sick or you're short-staffed or someone's on vacation. But you don't lower the standard.
No,
The standard remains high. If you don't
exactly.
meet the standard, we'll figure that out
Right,
to get
right.
it back where it needs to be. But I'm hoping out of all of this, I hope it does change, because what I see is when I sit down to talk to
Mhm.
someone about listing their house, you better show prepared. You better have your
No,
data.
no,
You better know
absolutely.
your numbers. You better be prepared. But to hire a buyer's agent, it's only about availability.
Oh, it
It's not skill. It's not
no,
negotiation
no,
strategies. It's not knowledge
no.
of the
You
market. If
pick
they're
up the phone.
if they're breathing,
Yeah,
hence my funny story about the monkey.
yeah. No,
But
no.
I don't think it would be a bad thing if a buyer had to think about who they were
Who-
choosing.
And they were making an investment in that choice.
Yes.
No, I
I
agree.
think they would be better off.
Think it's going to be hard to pull it. I really do. I think it's going to be a hard thing because I think buyers, and I mean, not all buyers, but a lot of buyers are just short on the cash. The cash that it requires
Yep.
to pay someone that.
So now, since we've been talking about our longevity,
Yes.
and I know you remember this since we're going to bring it up, but I can remember a day in our career when buyer agency didn't exist.
Yeah,
So
exactly.
can you imagine a time when buyer agency didn't
It-
exist?
it
Let's talk
was
about
just
that.
a
It was sub agency.
Yeah.
So every agent represented the seller.
Always.
Always.
Yeah.
That's just the way. And by the way, in other countries, that's the way it is.
Well, and it's still that way in a lot of transactions.
Yeah.
I mean, don't you think?
I think so.
Yeah.
Then they said, wait, this isn't good.
No.
Buyers don't have a voice.
Right.
Buyers need representation. Let's create this model.
Another form.
Yeah, another form.
document.
Yeah. And then sellers, you have to offer compensation
right.
to pay for them because the buyer deserves, which we do believe the buyer deserves representation. But I was like, so I think if it was a buyer expense, I think there is a chance some buyers are just going to call the listing agent.
Sure.
And now the listing agent, so let's say is whatever negotiated amount.
For the total,
Yeah,
right?
it's going to
Both
do both
sides.
sides.
Yeah, yeah. No, and I
which
don't.
isn't a bad thing. But
No,
I think that
I don't know
think it's
this.
going to be interesting.
Well, I think it is interesting too, and I think you know, mark market and actually became national market did determine what a commission was. What a total 6% commission is standard. Well, that didn't just come. There was a reason for it at that point, and the United States adopted it basically.
Yeah.
And don't you think? Am I right?
Well,
Do
and you know
think?
what? There's another thing I've heard, and I've read some reports on in certain professions, like the legal profession, they have standard
No,
fees.
that's right. That's
So it's going to be really interesting to see where is it going to go. Are we going to unstandardize all
right.
fees?
Right.
Because
And we're
if you
regulated.
call your attorney, should you be able to, Suzanne, say, "Listen,
Yeah.
you're not 10,000.
No,
I
no.
believe you should be 5."
No, exactly, exactly. Well, and I guess
Where are
I
we gonna go?
could. I guess we could do that.
I don't think they would take
my
us.
my attorney would kind of go, "See you, Suze." but I think that people do that to us every day.
Yeah, they do.
By the way they shop us, between other lenders
Yeah.
in rate or whatever, and so because whatever rate we charge determines on what we make on the loan. I mean, that's just
Yeah.
that's the way it works.
Well, it's always been a moving number for me based on client desire
Well,
and willingness.
in a way, I think it should be. And I've heard people badmouth realtors that negotiated their commissions down for certain reasons, and I think I think there's reasons to do that.
Yeah, I actually got a call from an agent, and one we're not going to talk about, of
Mhm.
course. And he was like, "I'm on my way to Greenwood, and I'm not happy because I'm only getting X, Y, Z." And I remember this was like years ago.
Yeah, yeah.
7 years ago. And I said, "Listen, that's what they decided.
Right.
It's their money."
I didn't.
It's
Yeah,
not my
I
money.
didn't tell them they could have it for that. I
This
didn't
is-
want a lower commission. I didn't
Yeah.
pick a lower
Yeah,
commission.
I was like,
Yeah.
"But this is what they're willing
Yeah.
to do, and I'm sorry that you're unhappy that you're
Well,
driving
so
car."
don't do it.
No, so don't do it.
That's what I would have said.
Yeah. But now in the climate of all the lawsuits, and that's another thing.
No,
I
it
think that
is.
I truly reflect, or I think the reflection of the lawsuits is agents are not working as hard to be as motivated to be consumer centric as we need to
Right,
be.
right.
And we've forgotten our fiduciary duties. I truly believe that. And I know that's very controversial, but
Sure.
I think we've gotten away from letting the client know they're what matters.
Right, right. And here's what I'm going to do for you.
It's the sorting process
No,
that
it
you and
is.
I were talking
No,
about.
right,
You know?
exactly, and it's making them aware of what they can expect and how you'll perform for them, and I hate to see that because just like obviously I think there's a place for a lender face to face. I think the most important face is to have a realtor walk you through this market, and yes, you get on the internet and you look at a million houses, but especially if you don't live in this market, you can see what you want to see, and there's so much more to the picture, and there's so much more to even the history you may know about the house that's not there, that's not in print, and if you've been in the market as long as you've been in it, you know a lot about a lot of properties, and you've been in and out of them, the neighborhoods, the schools, and those are things that you really are not going to get the inside scoop unless you've got a professional realtor like yourself working
Yeah.
for the client.
I think we're back to kind of where we started, but I love it, and that is just do a great job.
Yeah. Do it. Just do it.
Just we're back with Nike.
No, but you know what? We do this. I mean, we originally started out to do it to form a career, or I did, and I just so happened to realize I liked it, and I thought I was pretty good at doing it. And if you're going to do it, just do it right. And that's what I tell. That's our kind of our motto. If we've chosen to do it, just do it correctly. And I think that it shows, and I think customers recognize it, and you don't have to say it; they know. And
Yeah. Before we kind of end our convo, if you're a buyer in today's market, do you have any things that you would advise, or what would the buyer that's out there right now, and maybe they're surfing online for a lender, or maybe they're wondering about uncertainty, like you said,
Sure.
we've talked about rates, we've talked about the buy down, but is there anything you want to reach out to the buyer that's watching us right now?
The piece of advice that I would give buyers is, for one thing, don't cut yourself out. Don't assume you don't qualify just because someone told you probably wouldn't. Because lenders are very, that's our job, is to make people qualify. That's what we do. And so don't assume you don't qualify just because you think I don't make enough money, or And the other thing is don't under purchase yourself, because you're going through the process of finding a home. You are spending money. There are fixed costs with buying a home, no matter how small or how large the price is. And of course, you always want to be comfortable with what you've purchased and your monthly payments and whatever. But don't under. I know that sounds silly, but don't underbuy, because you don't want to go through this process every 2 years necessarily. I mean, the smart investment would be to pay these fixed closing costs and go ahead and buy something that's going to suit you for 4 to 5 years instead of 2 to 3 years. And there's always different circumstances that apply to that. But I really think that people assume they can't buy, number one, because they're self employed. And number two, they think they don't make enough. But there are programs probably out there for you. And it's something that it's opened up the market a lot and it's there are a lot of self-employed people in our market right now. Just the way they're building companies around servicing various parts of the oil business.
And that's kind of been your wheelhouse.
Yes, yeah, always has been.
I'm going to use, because I know he wouldn't mind. I'm going
Right.
to use Chisholm Moore.
Yeah.
I'll never forget when,
Chisholm.
and now Carissa's real estate agent on my team. But I'll never forget when they came, they tried to go with the lender of their choice.
Yeah.
The closing, we didn't get to closing.
Right.
It actually fell apart, a tragic story, And then he got to you.
Mm-hmm.
And he says, I will not do it without
I
talking
think
to Suzanne.
he'd marry me if I asked him. He's a young customer. He's so nice. He has a heart of gold. He's the nicest.
He will not do anything without Susan Smith.
I love that.
Yeah, I love it.
Well, it's fun to have customers like that.
And loyalty. But that's self-employed. You told him you could do something.
Yes.
And you did it.
Yeah. And I'll be the first to tell people.
Down.
Right.
And so he's like, I know she's going to shoot straight with me.
You know what? And I can't do every loan, and I'll be the first to say that. But if I can't, you'll know it by the time you walk out of my office. It won't be 3 weeks down the road. So that's the one thing that we do promise our clients, is that if we tell you it's going to work, it's going to work.
I love that.
So,
and your reputation says that
well,
too.
thank
so.
you. Thank
but
you. I hope so.
that we've, just let people that wouldn't normally get to meet us hear these wonderful stories, because to get an hour with Suzanne.
Yeah.
That's
well,
a big
no,
deal.
it's a big deal to me.
Thank you.
Thank
so
you.
much.
Thank you. It's been my pleasure.
Right, let's cheers again.
Up there you go.
Right.
Cheers.
Thank you.
Thanks.